Wednesday day. Happy oil inventories day. So, anyways, let's do it. So, good morning. Happy Fed Day, huh? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So cheer up! Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. You like that one? You like that version, Kenny? Great. Hey, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Namaste. Thank you very much for being a client of TradersWay.com. Throw your diamonds in the sky. Appreciate the effort that you're putting in every day. Become a better trader. Practicing on your demo account. Survey regarding these I don't. Let's revisit that show. Let's revisit that. So hey, so over time when you feel ready, trade real money at TradersWay.com. That's cool. Right on. I'm here to help. Ask questions. Get involved. Do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. That's a couple hours before the stock market opens. It's also London lunch. Great time for us to get together as a community. Today we also have the FOMC interest rate decision. Interest rates have already gone up. And I thought maybe we could take a look at the Fed funds futures market today. All that kind of stuff. 2:30, Grandma Yellen is giving her farewell speech. Let's see what else is going on. CPI this morning. We got oil inventories. Right? I think there's some Aussie news in Asia tonight, which for people in Asia is tomorrow. Very interesting day. So let's get going. All right, so let's zip over to this. So what was the last thing we talked about yesterday? I think it was like at least one of the last things. There was two. One of them was, boy, where were we? I think we were on this one. Didn't we draw? And by the way, if I ever say something that's not you don't think is right, let me know, because I say a lot of things, right? So I want to make sure we all have buy-in here. But I thought we talked about this, and previous to this, a large trend, and that everyone that had sold this on the higher time frame had every reason to sell it again, assuming a downward move accompanied by the Fed rate hike. Was it cable? Same thing to me, really. Let's double check this. I thought it was this one, though. The reason for it is I was privately heckled by somebody. And they heckled me because I said this. And I'm like, that was non-farm payrolls. And I said that because this is support and this is support. So that's clearly an out, which is, at least on the short run, is an up. But you certainly don't have to buy. You just certainly can't sell. But then up in this cluster of central pivots, it would likely to remain in the trend. I'm pretty sure I said that in non-farm payrolls. You know what I mean? Yeah, right, Mike. Yeah, and he said he was a hedge fund manager, and then that he lost a lot of money on that. I'm like, well, first of all, it did go up like 100 pips. Like, how could you lose a lot of money? Second of all, if you're a professional, what the hell are you doing listening to me in a webinar trying to figure out what my point of view is? A professional just wouldn't do that, right? But anyways, and then so anyways, so that then later on, I'm like, I'm not sure what you don't get. I mean, this is support, this is resistance. Like what point, what, right? You know what I mean? It's like, what don't you get? I don't understand. I don't understand what you don't understand. Me talking to another professional, right? Like, that is support. I don't understand why you wouldn't understand that. And this is a cluster, right? In a role reversal. I mean, a bear would sell that, right? Like, by definition, right? So, like, it's not even an opinion to me. But anyway, so it did come down hard because, look, if you were a bear here, right? And it's not just the pullback, it's the fact that we're playing very, very specific prices, right? I mean, to me, this shows, it validates that someone's using these pivots, right? Like, look at this, right? And then look at this. Just the pivots. Isn't that like reasonable proof that those are not random prices? I can't even read that. It's not 118, it's 117.91. It's not 118, it's 118.05. They're not like roundabout numbers here. It's not like they just shorted at 18. Although you could argue that too, but like, these are pretty precise. So it tells me somebody had orders there, right? Do you think it's reasonable to assume such a thing? Because obviously I don't know. But is that a reasonable assumption to say, because these numbers are so precise to my pivot points, that I'm not the only one looking at these pivot points, and I'm not the only one that would sell a lower high in a downtrend? Right? No? Oh, Lester, you install a pivot point plotter. It's an indicator. Robert, thank you. Thank you, Robert. Yeah, I actually care what your opinion is when I ask a question. It's not rhetorical. Okay? So I look at it and say, I think somebody shorted a lower high in a downtrend at a pivot cluster, central pivot cluster, psych level. Like, why wouldn't you if you were a bear, right? Right? Like, what else do you do? Is anyone trying a different strategy than buying at support and selling at resistance? Okay. Is it also reasonable to think the Fed's going to raise interest rates today? And could you have thought that on Tuesday? And could you have thought that on Monday? I'd also say yes. Okay. Now, there's a short run and there's a long run. On the long run, right? On the long run, I would like to see the dollar weaken. On the short run, the Fed is raising interest rates. right? So what we might find in the next 6 months, and this is why I want to look at the Fed funds futures market, is that I think the market might be pricing in too many hikes. So it's not that the dollar wouldn't get strong during a hiking period. It's just that it may be too strong. Now, the dollar's had a pretty bad year, so, okay. So maybe there's been an ebb and flow in repricing, okay? I just don't want to plan on a flat 2018, right? I don't even want to plan it like. So, so anyways, there's that, okay? Okay, there's that. And what did I want to say? Anything else? No, I guess that'd be about it. Oh, and the very, 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 very last thing we did yesterday. What? Let me ask you. What did I do at the very end of my webinar with the euro yen? I was up 130 pips profit. Closed it about here, about in here, right? Yeah. I'm like, yeah. So what makes what was the catalyst that squeezed me out? Okay. Is that a random walk through Wall Street? No, one of the things we talked about, and we talk about all the time, is this is exactly the price, right? 133.77. Very specific. That is the price in which I would expect a bear to sell. That's an entry for a bear. But I bought down in here. I think it was about here, right? So what, am I supposed to manage the risk? Yeah. Am I supposed to be aggressive or conservative? Well, is this an uptrend? Yeah, so what do I do if I feel like the top of the range is holding? Yeah. Yeah. Or Martin says sell. If you're a bull, maybe not. You totally could though. Especially, yeah. I mean, yeah. I'd like to say that I swing both ways through the gate, but I don't. You totally could. You totally could. I didn't, as you can see. But so that was an anatomy of a trade. We planned it out together. I took it, well, on an airplane or maybe from the hotel or something. Okay. So anyways, that was cradle to grave trade planning, trading, letting it run for 4 days and taking profit at resistance. Well, Kenny says, and then especially with the data of yesterday, blah, 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 blah. But I got out, and then like an hour later, I noticed it had like essentially crashed. I got out like in here, I think it was. I mean, it started coming down. I'm like, all right, look, we're kicking off this M3. And then all of a sudden I come back like an hour later or 2 hours later, whatever it was, an hour later, we're down here. I'm like, holy crap. Right? I'm like, wow, that just dropped like 70 pips. right? It took me 4 days to make 130, 40 pips, whatever it was, right? I think after 4 days, I was up 150 pips. I take profit. An hour later, it's down 75. I'm like, whoa. Yeah. Right? So anyways, lucky dog. So yeah, that's what we did yesterday. Cool, right? Cool beans. We're climbing. You know, let me move this up here. Yeah, we're climbing, eh? This is USD Mexican peso. I drew that down in here. But unfortunately, just not a big favorable move this month, huh? No, this is a Fibonacci. This is a Fibonacci study. And it's drawn as if it's a downtrend, but this emphasizes a bottom. This emphasizes a retracement into a 382. Okay. And this emphasizes a failure of continuing downward. Okay. And generally, based on the cyclical nature of this currency pair, there's nothing to push it down for another 2 weeks. So if it, you know, it's challenging here, and I'm not. There's nothing to push it down, is what I'm trying to say. So that one might want it to go up, especially if they raise interest rates today, which I would expect. But then, therefore, that's already priced in. But I don't know. Maybe this heads up, and maybe we find ourselves at a 618 closer to the end of the year. Well, Roger, I'm a seller of this pair, but like I said, not for 2 more weeks. I won't even look at it for the next 2 weeks. I'm just showing you that we've come off support. See the roll reversal? And we're back up to resistance. And I don't think down, so it's probably more up. Okay, so it's not like I'm buying dips. Yeah, well, it'd be the same as ever, Peter. I would think, but a little less clear if money moves for holiday gifts and stuff, right? So I pay attention to a lot. Usually, I pay attention to many other things at the end of the year than the USD Mexican peso. So I can't give you a coherent answer. You know, I'm usually sitting on 30,000 yen pips. So I don't think I've even noticed the peso at Christmas time before. So it's kind of sad that we have to look at it this year. All right. So don't know what to say about this. Yuck. Don't even want to look at that. Oh, how about kitty cat? We are hoping for oil up, but we also have US dollar strength, right? MRC, don't do that, MRC. No, 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 no. Come on, MRC. So anyway, sideways, right? U.S. dollar strength, Canadian dollar strength. I know you know better than that. Yeah, I heard something. Yeah. MRC. Mr. C. Well, there should be a space in there, Mr. C. And after that, so that's kind of a bummer, right? Because strong oil and Fed hikes at the same time kind of kills that trade, right? Look how clear this is. I'm still a buyer of dips, but holy smokes, huh? Just kind of waiting, huh? Yeah. So the first thought is, do I need to change my bias? Well, for example, people have told me, Mr. C's people told me there's a drawdown in oil inventories. Yeah. Um, I'm bullish on oil generally speaking because I generally feel that macroeconomic conditions are improving globally. Got it, Brooke. Anything for you, Brooke? Okay. Now, if you're pulling the bear side, Peter, that's cool. If I was a bear, I would say that I believe Kuwait, Venezuela, and Russia are cheating, and supply is higher than reported. Okay, and Kuwait's the new cheater. At least we know they're cheating now, and that's new information from this week, right? So, so I would go for that. Do you read the short-term outlook? Well, remember though, supply is always going to be relative to demand, and I think demand is higher. But Peter, do you read the short-term energy outlook every week? Don't really. Yeah, yeah. All right, hang on. Let me check my email. Hang on. Short-term energy outlook. Let me get the recent one. Here we go. Liquids. Let me get to the actual link. Let's take a look. And I'll zoom in. Can you guys see that okay? Let me zoom in for you. Let me zoom in for me. Cool, right? Let's see. North Sea Brent crude rose, averaged $63 a barrel, an increase of $5. WTI, this is the spread. We don't care about the spread. EIA estimates that U.S. crude oil production averaged 9.7 million barrels a day. November up 360,000 barrels per day. Most of the increase was the Gulf of Mexico. Higher production. I'm trying to find something else. Hang on. Trying to find a different it's oil production. I don't want oil production. I want inventory. Well, you can see we're projected to consume more in the future. Consumption. Can't find that. That's production, but I thought it also was going to show demand. Or supply, I should say. Gee whiz, I can't quite get what I'm looking for. Not funny. Maybe not so. All right, so I can't quite find what I'm looking for, but there's plenty of information out there for you to develop a bias on oil. Okay. Okay. So the EIA and the IEA produce unbelievable amounts of information. So I don't know. I'm a bull on global macroeconomic improvement over the next few years. So that would be it. Yeah, the BP report. I did a class on the oil industry at Harvard. It was a very very difficult class, but I downloaded things like the British Petroleum report that I think they do twice a year, and the CEO gives a speech and stuff. And I used that in one of the papers. It was I don't know, it was very interesting. I haven't read the new one just because I'm doing other classes. But let me say, I got an A+ in that class, and that was a hard class, like very, very intensive. I worked my butt off for that one. All right. So, anyways, generally up, but it doesn't have to go straight up, right? So, put it differently. I got to watch the pivots, right? And I do notice that there's a pivot cluster up here. This is disconcerting. So it really comes down to how it behaves here. I think our risk is this cluster in here. I'd like to get it up here. But the risk is lower high, lower low, which would change everything for me. That hasn't happened yet, so I need to pay attention. Remember, my fundamental bias may last for years. You understand that? Like right now, I believe economic conditions globally are improving, generally speaking, right? Which means, generally speaking, there should be an increase in demand. Now, demand more demand than increase in supply. Well, that's what we have to look for. Therefore, technical analysis will show us how market participants are watching these things. So I could, in general, be a buyer of dips. I don't have to buy every dip. Doesn't mean I can't sell. But in general, I could say I believe demand is going to increase, and I have to pay attention to supply. And as long as demand is higher than supply, we're okay. Like I was having a conversation with somebody, might have been my wife, and we're talking about interest rates and the Fed policy. Yeah, that's how we roll in my family. So anyways, and she says something like, well, interest rates are going up, right? And I'm like, whoa. Yeah, well, let's see. Yeah, I mean, they are, but let's say we raise from 1% to 1.25%. Is that going to kill the economy? Is that really raising? Right? Right? Well, if inflation's at 1.75% and we're raising interest rates from 1 to 1.25%, well, we're still below normal. So we still have unusually low interest rate, right? So yeah, we might be raising, but it's still very accommodative. Typically, if let's say inflation is 4%, interest rates would be at 5%, right? If inflation was at 4%, interest rates shouldn't be at 3%. Right? So right now, interest rates are still below inflation, even though inflation's low. Our policies are still technically accommodative. So, I don't know. So, whatever. I'm too old for this nonsense. All right. What, gold? Okay, we got to do gold. I don't like gold down here, but this is obviously, or let's say, I wouldn't say obviously. I would assume this has to do with an increase in the value of the dollar, with the assumption of interest rates going up today. Maybe, is there anywhere to buy this? Not in these conditions. So you can see I was a buyer here, I was a buyer here, I was a buyer here. Well, this was sort of a higher high, higher low scenario, but this break here and this break here kills all of that, because that's now a sort of a drop lower low scenario. So that forces me as a technician to say lower high, lower low, lower high, lower low. Okay. So what if it's down here? Finally. So looking at this, I think I could have permission to buy it at weekly S2. Sure, Ryan. But, right, looking at gold, I have permission to buy it at weekly S2, right? If I saw, what was it, a dragonfly reversal pattern? What was it yesterday? That's Katie's dragonfly, isn't it? Dragonfly Doji, yeah. Boom! Yeah. Shooting star emoji. I mean, the doji emoji. Yeah. So, anyways, I mean, this is how I treat that. I don't want to. I don't want. I don't really want to sell gold here, and don't really want to buy it. I mean, you could. I mean, we're out of monthlies, right? So what do? Sell until the cows come home? That's for daily pivots. So you could, yeah, you could drive this down if you wanted to. You just got to be careful. I'd rather see what happens down here, or sell. Have it get lower and then sell a rally or something. I don't know, but we'll see. If we go back in history, instead of way back in history, I was a bear on gold for a very, 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 very long time. And it had to do with the market being a yield hog. Why would you buy gold when it doesn't pay you yield? So it's not that we can't be a bear. It's just like, it's more like neutrality, maybe. All right, so I got a request here. I'll open the floor to requests. Aussie dollar. Excuse me. Let's go. Mickey, why are you ignoring the candles at the very bottom for support? Oh, wait. I want to go back to that. Hang on. Let's go back to that. Okay, so John and Mickey are having a conversation about. All right. So let's go back to that. What are you guys talking about? And then let's talk it out. Why are you ignoring the candles at the very bottom? These ones here? Trying to figure out the time frame you're kind of. Yeah. When drawing support, right? Yeah. So I've connected these. I mean, I'm not sure where I'm trying to figure out where you're talking. So John responds to Mickey, says, "Ooh, let's go back. Where supply exceeds demand and vice versa in my basis. U10 base more pivots and long term." I'm still not entirely sure what you guys are getting at. Yeah, well, a zone except, so you guys are pulling out like exact prices, and I have to have reasoning. So, like for example, general support and resistance is subjective, but I don't think. So John says, I talk about specific areas where supply exceeds demand and vice versa, and base my support and resistance on this. Okay. You tend to base your more on pivot points and longer term support and resistance zones. That's true. But how, so specific areas where supply exceeds demand. So I'd like you to define that. Yeah, well, post it on Forex.Today, Johnny boy. Okay. Yeah, but I definitely, right? I definitely am a fan of pivot points. There's no doubt. Okay? There's no doubt. So I look at price action first. All right? Okay? So let's start with that. I look at price action first, then I look at pivot points, and then I try to look for clusters of the two. Okay, so I do things in order. It's sort of like peeling an onion, right? The first skin first, and then the second skin, then the first skin. Okay, so right or wrong, that's just sort of the order. Okay, and then you're going to have to extrapolate trend, right? So price action first. So I can look at role reversals, right? For example, that's clearly a sell zone. This was clearly a sell zone, right? And I've taught you that over the years, constantly, like lower low, look left, bring it across, right? Lower low, look left, draw it right, sell high, down, look left, bring it right, right? Sell. So that's the price action. So that in general is trend trading. Okay? That's what I try to get you guys to do. Trade in the direction of the trend. And it sucks when there isn't a clear trend. So if you look at it over the course of a year, especially if you're a newer trader, I'd rather you just do one thing, because when the market is moving right, you make money, and when the market's not moving, you're not really trading much, versus just losing money all the time. Now at least you have a situation in which you're supposed to make money, right? So the first part is price action. That's the trend, okay? And that's going to give me the support and resistance, okay? So when I'm down here, I look left, I drag it across, there's my new sell zone. Well, I'm still down here. When we're down here, I look left, bring it across, here's my new sell zone. Well, I'm still down here. Do lower low, I look left, I drag this across, here's my new sell zone. Well, I'm still down here, okay? Then I look for pivots. Let me just change colors here. There's plenty of reason on this chart to believe it's bearish, okay? You know, using pivot points, this is a sell zone, 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 okay? So now you got about 90% of what I do. The trend is down. I use pivot points and price action to identify support. Oh, here's a great opportunity. The price action okay, is support and resistance. Oops, speed ups. Is support and resistance for price act for price, just for price. Pivot points are support and resistance for market. So you know how I use oscillators to separate price action from market forces. I use moving averages to separate price action from market forces. Well, I'm also doing support and resistance of price and support and resistance of market. I'm constantly separating the two. Okay, you see? So putting all this together, I know the trend and price action, and by that I mean, trend and price action in general should be the same, right? Lower low, lower high makes me a bear, right? And with that, I know my sell zones and I know my take profit zones ahead of time. I know my sell zone, I know my take profit zone. I know my sell zone, and I know the take profit zone, right? I could do things like, sell 5A crosses and all that kind of stuff if you want, sell 2155 crosses, right? All kinds of interesting things. After that, that's all tactical. Probably should not be doing tactical analysis on a 4-hour. Should probably be doing it on 15-minute or less. Okay. But yeah, so that's what I do. I look for trend. I use price action for support and resistance of for price, and then I use pivots for support and resistance for market, and the rest is tactical trading. This is all just strategy. I'm a bear. I know the price. I know prices where I want to sell. I know prices where I want to take profit, so on and so forth. What makes you avoid to sell in the next resistance? I wouldn't avoid, Kenny. These are all sells. I need a new color now. I guess black. I guess I was going to. This is a sell. This is a sell. This is a sell. And you could take profit here for sure. This is a profit area here, right? So on and so forth. Okay. Okay. These are all potential entries. This one is pretty straightforward. This one's pretty straightforward, that kind of stuff. This one I would have liked a little higher. Okay. So now, when we get to things like a roll reversal area, the hypothesis when we're testing this is down. Okay. So when we get into an area where we're in a potential sell zone, now again, I would have preferred to sell it up here. Okay. But when you're approaching the zone for a potential drop, you get off the 4-hour and you move down the time frame, and that's when you start looking for reversal patterns and such. Okay. Well, how do you know the trend is over? Again, price action. Okay. No, in that case, that's an inverse head and shoulders. Okay. Or like this green area. Okay. The pivots, right? The support and resistance for the market. Okay. This here tells me to take profit. Doesn't tell me to go long. It's not what it's meant for. It's called a pivot profit zone. Okay. So how do you know the trend is at an end? Well, I don't know if it's at an end, but you should be out. Monday morning, this is a sell. And your target Monday morning was here. So you sold Monday morning, you were short all week. Monday morning here, That's a sell zone. Your target, right there. Okay. Okay. So let's drop into a 1 hour a little bit. And I'm a bear, if I'm a bear, okay, you see how I made a lower low? Okay. I need to look left here. Oops. And say somewhere in here, I might see resistance. Okay. And my plan would be something like this. Okay. Now, did we miss the news? What time is it? You guys got me babbling on. We missed the news. Can we get the number? 1.7. All right. Thank you. Okay. That would be the general idea. The problem with this is it's kicking off an old target. So whoever sold this last Monday has a target right here. You see that? So that order is sitting there. Okay. Also, do you see how you should have been short Monday kind of thing? You don't really want to start now. So what you want to look for is it to roll over, and you're looking at these prices. Okay. But that messes it up. Okay. It was fun on Monday. It's Wednesday now, right? Cool. So the market's freaking out, right? So we got 1.7 versus 1.8. So what? What's happening now? The market's saying, oh my gosh, they're only going to raise twice next year, not 3 times. Cool. All right, so I wanted to do the Fed Fund futures market today, and then maybe we can wrap it up. Fed Fund futures. if you're going in the wrong direction, Martin, for sure, I'd much rather be paid than have to pay. Wait, this isn't what I wanted. That's what I want. Wow, they have user guides and stuff now? Holy smokes. Robert, yeah, maybe. Yeah, the USD yen pays a lot of attention to big cycle levels. Okay. So what's the likelihood the Fed's going to raise interest rates today? 87.6. If you throw that in there, it's 100%, I think, right? Just trying to zoom in a little more. Okay, so what you do is you could actually say it's 87.6 plus 12.4. It seems like, okay, okay, let me go back this. Okay, pretty high. January, no raise. Okay, March, 37.4% of the market believes that the Fed will not raise in March. 54% believe they will raise in March. And some people, not many, think we'll be way up there, that they'll raise in January and March. Okay? Then the market doesn't believe they'll raise in May. And now we're at this point where they might not raise in May. There's only a 36% chance they raise in June. Okay? So that's today, that's March, and June, right? But you can look at it this way. There's only a 36% chance, 36.5% chance they raise 3 times in the next 6 months. And you can watch these numbers adjust daily if you want and see how the professionals are looking at Fed policy. Okay? See that? So if these numbers go up, let's say if this number goes up from 36 to like 46, the dollar should get stronger. If this goes from 36 to 26, the dollar should get weaker. How about that for a tip? There's your dot plot, bro, for shizzle. You ever read about the dot plot? There it is. Right now, sitting 2.25. So the dot plot says December, March, and June. I think that's going to change down. Okay, but I am a bull in macroeconomics, so it's kind of like a topsy-turvy world. I want to look at that USD yen since we brought it up. It's all on the government website. Oh, I just killed it. Type in FedWatch. That's a CME group. Okay. So we're at 113 now. I'm long at 112.50. We have support here. And a little birdie tells me Japanese buyers are, what, forced to buy it here? Yeah, I don't like things like that. So this is where I slapped Mr. C. I'd rather Mr. C say, this is support. All right? Can't you just buy it because it's price action? Right? Can we just do it that way, Mr. C? You want to buy a dip at a cluster of central pivots. Yeah, I just don't like the language of, you know, Japanese buyers or blah, blah, blah. I don't know, dude. I don't know. But that's price action. If you're a bull, you would buy it there. The scary part, like we saw in the other pairs, if you were a bear, you sell it here. Okay? That is the bear sell zone. It is. That's it. Okay? Oops. Let me do black, right? Monthly M3, weekly M3. That is where a bear would sell, and long term. Oh, yeah, there's an old, that's an old template, so the watermark failed. Okay. Okay. Entry point? Sure. Oops. Okay, how about a giant bearish engulfing candle followed by a retracement? Okay. How about a lower low followed by a roll reversal? Both of those are entries. Here and here. Okay. That's just standard price action. This is, right, lower low, lower high, pivot cluster. And you knew it was a sell zone a day or two before it even set up. Okay. Okay. Entry on the five. I mean, you can 5-minute, 15-minute, 1 minute. What's the difference? Okay. Okay. So we could go to like a 5-minute. Let's see if I can fit this in here. Okay. So the key is you would have been waiting for this to happen before it happened. Okay. Your sell zone is here after the big bearish drop. Okay. And then once it made a lower low. Okay. I don't know if you do it that way, but you definitely would look here. Let's probably do it this way. Just for fun. All right. So you're definitely looking left. This is price action. So you're doing this down here when the market looks like this, right? I do it all the time. I'm always looking left. So if we're down here, I'm looking left. I draw this orange line that you see here because I will probably in the future sell around that price point. Let's just get rid of this. Okay? So this plan already occurred. The drop, okay, bearish, again, off my sell zone, and that's an aggressive bearish move. So I want to sell the lower high. So there's my sweet spot. And when I do that, what am I expecting when I short a lower high? A lower low. Thank you. Okay. And no, and Fibonacci helps me guess on this, right? So a 618 predicts a 1382, so that puts me about here. Now I'm done. Oops, hang on, not that one. Okay, right? So now I think it's going to drop around here, just based on fibs. That's what fibs are for. That's what fibs do. It gives you an entry, and it makes a prediction where we're going. Okay, great. Then when we're down near my, I would say target, my estimation of extension, right? Then I'd look left to predict future resistance and price a price zone in which I would like to sell again in the future. This is all straight out of the price action course. This is very basic trading, right? Very, very basic stuff. So now I look left and say, well, over here, I want to sell that in the future. Oh, okay. See? Good. And so now what you do is you look left and you say, oh, maybe around here, maybe in the future, right? Okay. But what I've always told you, always, for years, trying to figure it out on the fly makes it you too slow. Because by the time you see it, it's happened already. Okay? Where you make your money is to say, this is going up, but I'm a bear. That's a sell zone. So I'm going to look for a pattern like that forming somewhere around this price. The rest is easy. Now, you don't know if you're going to make money, but setting it up is easy. You know the price in which you're expecting a drop. All of a sudden, you see a ginormous bearish engulfing candle right in the zone you expected. Well, hell, that's where you get paid, not like the price action stuff. That's the easy stuff. Dropping into a 5-minute chart or a 1-minute chart or whatever, you know, that's just the fun stuff. Okay? That's scalper's paradise. You're just trading price action into your trade plan, though. Most people that trade on the small time frames that are inconsistent, they don't have a strategy. They don't have a longer term view. So all they're doing is trading the price action until the price action stops working, which means they get 3 profitable trades in a row and then 2 losers in a row. And then they're buying instead of selling, and they get 3 more winners in a row. And then they then they buy into a sell zone, then they lose 2, and then, you know, and all of a sudden, yeah, they make pips, but it's a lot of work. I think the money is made here, where you're like, I'm a bear, this is coming down at this price. And then you're paying attention. When you do get the bearish engulfing candle, you're like, oh, totally saw that coming. And then you get in the game, sell. But like, shouldn't you stop that strategy now? If not there, certainly the pivot cluster, right? Now, why would I say that? Because I would assume that the bulls are going to want to take control of the market again because it's a bullish market, for crying out loud, right? So once again, the money's made in these areas, and the rest is just buying low and selling high. But you got to have the proper strategy. You got to know when to sell. No. You got to know when to expect a reversal pattern, like a giant bearish engulfing candle, right? You have to expect it before it happened. And then you got to know when to stop that strategy. That would be like selling. That's a counter trend, right? Selling into the uptrend. Okay, so like, do I know if it's going to go up here? No, I have no idea. I know that I probably don't want to sell anymore. Okay, and then here's what I'm thinking. Okay, here's what I'm thinking. I am looking for some sort of pattern. I don't know what it'll be, here or here. I know my price. I don't know when or if it'll happen. Okay? Okay? And remember what I said, I think the market's priced in too many rate hikes. Didn't we talk about it on Monday? I think I talked about it on Friday at non-farm payrolls. Oh, I do remember now. Do you remember why? That's right. I remember specifically now. I said it's very difficult for the Fed to raise the Fed funds futures interest rate. The Fed funds rate is a short-term interest rate where banks lend money to each other to meet their reserve requirements. We're being very specific now. So if the Fed uses open market operations to raise the Fed funds rate, that's like overnight rates and 30-day rates, that type of stuff. Very, very short. But they're also reducing their balance sheet by selling their $1.7 trillion in mortgage-backed securities. Mortgage-backed securities, MBSs are like 30-year debt. So if they're selling short-term bonds and they're selling long-term bonds, right? Wait. No. Anyways, they're going to create, if they're not careful, they'll create an inverted yield curve. Okay? Okay? If they're not careful, okay, they're going to raise and lower, and right at the same time, they're going to, it's not good. You see what I mean? If the yield curve inverts, it generally is a sign of the economy about to crash. So I don't think, now I could be wrong, but I don't think members of the Fed would purposely do that. And I think they're smart enough to know that if they're doing both, would likely produce that. So I don't think they'll do it. I think what they want to do is reduce their balance sheet and slowly raise the interest rate at the Fed funds level, the short end, right? Now, if we got a scenario like the UK, if all of a sudden like inflation was at 3%, holy crapola, let me tell you, the Fed would jack interest rates. Okay? But to comment on what I was saying before, we only have 1.7% interest or inflation, right? So what's the chance the Fed's going to raise to 2% in the next 6 months? Or even in the next year? I find that very difficult to believe. I think maybe 1.5. You know what I mean? I think we got one more I think we have one rate hike too many priced in, is all I've been saying for a long time, but I explained it very clearly. I know I bumbled through it today, but I thought I very clearly explained it at non-farm payrolls. And I think I drew the entire yield curve, and then I adjusted the curve and all this kind of stuff, and right? So that's all I'm saying. And if that's true, the dollar would weaken. So I don't know. So good luck to you. Thank you for being a client. Thank you for all your questions. Thank you for being involved. I don't think I quite addressed what John and someone else, maybe Robert, were going back and forth. But I apologize because I didn't quite understand. But I only know what I know, and I only trade the way I trade. I don't know how other people trade. Yeah, I'll upload it. Yeah. Yeah. Well, you know what we need is, we need to hang out in an exotic location, John, and just have a couple of drinks and talk it out. Yeah. Yeah, totally. Yeah, John, you're probably smarter than me. That's all. I just, I do what I do, and that's enough. Yeah, I was so close to Kuala Lumpur, so I got the message through that. At least we talked something. I know I got something across, right? At least something came of it. So thank you. I do appreciate it. To speak about Kuala Lumpur and stuff. Um, oh wait, no, forget it. All right. So, anyways, got to go. Peace on earth. May the pips be with you. May your profits be above average. Uh, Play it safe out there today. Different people have different ways of trading things. Yeah, and that goes back to an epiphany I had one time. I was in a very, very exclusive club in New York City at a hedge fund manager thing, and you had to be invited, and it was all, you had to get through steel gates and everything to get into this beautiful mansion. It was really a classy joint kind of thing, and there were some rooms like libraries and stuff where I just walked in and looked around and stuff. But anyways, it got to a point where there was a panel discussion going on about I think high frequency trading or something. So I'm in this room with 200 hedge fund managers. And these are guys that would spend $3 million on a computer, back then, for their high frequency trading stuff. But anyway, so I'm in this room, and I had this epiphany. I'm like, oh my God, this is cool. We're all doing something different, right? Everyone in the room was smart. I'm like, I bet you everybody makes money, and we all do something different, right? It was very interesting. I remember thinking, that's cool. We're all doing something different, but we're all smart and making money. And then later on I had lunch, and a guy sat down and shared a table with me, and so we were having our little buffet lunch and talking it out. And I said, so what do you do? And he's like, oh, I do merger arbitrage. I'm like, oh, right on. So we talked about that. And I asked a bunch of questions. I thought, oh, how fascinating, right? And then he's like, what do you do? And I said to him, well, I'm a currency trader. And he was like, oh, I could never do that. It's just way too complicated. And I'm thinking, wow, because the merger arbitrage sounded, complicated. So it was very interesting. There's one guy, who, Joe? I probably taught him how to trade. That's probably why. I don't know that guy. Okay, anyways. So, anyways, I don't know. I've been doing this for 15 years. Back when there was no education in Forex, you couldn't even buy a book on Amazon about Forex. Imagine that. 5 years after I started coaching, if you went to YouTube and typed in Forex, I was the first 21 pages of Forex videos. Every single page was my video for 21 pages. So anyways, I've reached out to a lot of Forex trading souls. Yeah, 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 yeah. Yeah. So anyways, hey, peace on earth. May the pips be with you. May your profits be above average. Take care, everybody. I love you, and I'll see you tomorrow.